Welcome back, family and friends, to our educational lives as we continue to expand our knowledge about different aspects of financial literacy, such as budgeting, crediting, investing, etc. I want to put a great topic on you guys' mind today. I hope everyone is doing well, by the way. My day has been going great. I hope you all day has been going well. But let's jump right into the topic that I want to talk to you guys about, and it concerns your auto insurance. Do any of you know how your auto insurance rate is affected by your credit score? I'm sure many of you have not thought about this, but today's live is going to go over this topic. So, everyone, please have your pencil and paper ready to jot down some notes. All aboard the financial literacy education train. Choo choo! Let's look at today's preview of agenda. So, we're going to look at what a credit-based insurance score is. Many of you may not be familiar with this, but we're going to go over that. We're going to look at how credit-based insurance scores work, why insurance companies use credit-based insurance scores, and while we're going over those topics, I want you to think about, do you think your credit score affects your car insurance rate positively or negatively? Okay? Moving right along. What is credit-based insurance? Many U.S. auto insurance companies use credit-based insurance scores to help determine risk when providing insurance quotes, unless you live in like the states of Massachusetts, Hawaii, or California, where this way of determining risk is banned. According to the Insurance Information Institute, credit-based insurance scores, they don't factor in your job, your income history, or your gender or any personal information. They look at factors like your payment history, your total debt to assess your risk level. Car insurance companies use these type of things to determine the likelihood of an insurance claim being filed in the future. I want you now to take time out, reflect on your own credit score, and then I want you to think about your insurance rate that you're paying right now. And think, okay, is it according to this score where, is it less than average, below 620? Is it average, good, excellent? We would want to be in the green of the excellent, where you have the lowest cost. Of course, some of us sometimes we haven't quite reached that level just yet, but we're working toward it. But it's okay, because this, as I say before in my other lives, as we learn to do better, we will do so. So it's all about, learning as much as you possibly can. I know sometimes a lot of us don't want to continue to further our education, but how can you do better if you don't know better? Let's go right on into the next topic. How credit-based insurance scores work. Insurance companies like Geico, Progressive, State Farm use the credit-based insurance scoring. I'm sure many of you probably are aware of this to a certain extent, because when they give you a quote, they're going to ask you for your permission to run a credit pull on you. This credit pull will help them with the credit-based insurance score, which in turn factors in the eligibility for your payment plans and your insurance rate based on your driving history, claims history, etc. High credit-based insurance scores with an excellent driving history and zero claims on your record qualifies you for lower rates. Now, you can have an excellent insurance score, but if you have a less than stellar driving history, meaning you have filed a lot of claims in the past, you are going to be considered risky. So think about this. Moving on to the next topic. Why insurance companies use the credit-based insurance score. Research shows that credit based insurance scores can accurately predict accident potential. Statistically, analysis have shown that those with a low insurance score are more likely to file a claim than those with a higher credit score who get into fewer accidents and cost insurance companies less than the lowering score counterparts. These investigations were examined by the Federal Trade Commission to understand the relationship between credit history and risk. So, this study has justified that the credit based insurance score is effective of predicting risk of drivers. I want again you all to think about your past experiences, whether how many accidents you got into, how many claims you filed, you know, what all have you done in your past that could have made your rate where it is today. And then I want you to also take that into effect of, okay, well, if this happened with your car insurance, does this also show these type of instances in your credit score, meaning past due payments, delinquencies, things of that nature, because they go hand in hand. So basically, altogether, if you do well taking care of your credit score, meaning you're making them on-time payments, you have a good payment history, you have, different multiple of revolving accounts going on, meaning you're showing that you're responsible, which is number one, and number two, you know how to handle business. And this is what these car insurance companies are looking for. They're looking for you to be responsible and you know how to handle and take care of business, meaning making those insurance debts, or I should say those insurance bills that you have to pay every month on time. They want somebody that can pay on time, which is, like I said, going to reflect based on your credit score. So in summary, as we discussed, I want you all to think about how credit doesn't just affect buying a car or buying a house. It can affect your utility accounts as well as job opportunities. The next live that we have, we're going to talk on how credit affects job opportunities. I want to ask you something. How many of you have applied for a job, had all the qualifications, but when it came to the employer pulling your credit, they offered the position to someone else because you had a 500? Now, trust me, I know that feeling. I've been there and I've been in that position. And I did not like missing out on a life-changing experience. So, what do we do about it? Well, it starts by first doing what you're doing now, educating yourself. And number two, putting what you learn into play. Thus, so long, farewell, my friends and family. We have reached our destination. The train ride has ended. So until next time for our next live, choo choo, family and friends.